Today, we're breaking down something that affects nearly every part of your financial life, but most people rarely look at your credit report. Whether you're applying for a mortgage, financing a car, renting an apartment, or even interviewing for certain jobs, your credit report plays a powerful role behind the scenes. It's more than just a number. While many people focus on their credit score, which we seem to get all the time now from different companies, they send me messages with my credit score in them. The real story lives inside the report itself. Your borrowing history, payment patterns, and the details that lenders use to decide how risky it is to trust you with money. Welcome to the Wavy Plus original show, Sense and Sensibility, where we discuss smart shopping, saving strategies, and basic financial principles that my guests and I have used both successfully and unsuccessfully as we move toward a better future. I'm your host, Laura Oliver from afrugalchick.com, where I have been helping people live well without going broke since 2009. The credit report has become a thing of mystery for some reason. People go years without checking their credit for fear of the unknown. But you should review your report annually to monitor for fraud and see what's going on. You don't want to wait to apply for a mortgage and then find things you didn't know existed, which you will then have to straighten out while someone grabs that condo you wanted. When I worked in finance, we had this great young couple that came in to get a car loan. They had moved out of a previous home 18 months before, and somehow their last cable bill had not been paid. According to them, they never received any notices, so they had no idea they had this huge black mark on their credit. After several phone calls, they were able to pay the bill and bring in a receipt. Then there was paperwork to fill out to send to the credit bureau, and that takes at least 30 days to process, assuming they don't find anything wrong with your documentation. All of this held up their ability to get the best rate on a car loan. Basically, your credit report shows all your interactions with credit and debt over the past few years. Some items stay for 2 years and some up to 7. It shows both good and bad interactions, along with a notice for each instance you make a payment on time. It also shows late payments, although they do have to be 30 days late to appear in your credit report. Delinquent or defaulted loans, items in collections, unpaid tax liens, foreclosures, and bankruptcy. So that time you skipped your credit card payment and bought an expensive pair of shoes will follow you for approximately 7 years. So what is a credit score and how does it work? So the credit score is actually a pretty recent invention. Back in the day, lenders just went by their gut. They decided if people were a risk or not. That generally did not work out well for women or minorities. So in the 1950s, 2 men decided it was time to set up a system that would be a bit more objective. They developed a credit scoring model based on behaviors they believed could assess risk to the lender. In 1958, this debuted under the name of the Fair Isaac Corporation. Their names were Fair and Isaac. It came together to be known as FICO. The formula was tweaked over the years until it settled into something that we're more familiar with in the 1980s. Your credit score is basically your rating, similar to checking the reviews of an Uber driver or an Amazon seller. If you dream one day of having those credit cards with the super rewards, like getting free flights or cash back on all your spending, you must have a high credit score. A low score gives you the credit cards with sky-high interest rates and the payday loan. If you end up desperate for cash, you will be stuck with few options and have to take the best of the bad choices. Your base FICO score ranges from 300 to 850. There are some specialized scores, and I just learned this. I didn't know. The auto industry, for example, has their own specific score, which goes up to 900. The highest I've ever seen myself was about 825, and we passed it around the lending department like a Beyonce autograph. So here is how the chart breaks down. 800 or higher, exceptional credit. 750 to 799, excellent credit. 700 to 749, good credit. 640 to 699, fair. 580 to 639, poor. And then, 580 and below, it's just pretty much bad everywhere. Dipping below 650 is usually where you start to get in trouble. Your goal should be to have a credit score above 700. This tells lenders that you are low risk and likely to make payments on time. If you are a perfectionist, you can shoot for over 800, but mostly it's for bragging rights. In my experience, only those over 40 could break the 800 ceiling, and it took years of good credit to reach that point. I'm sure there are exceptions, but time is a major factor in your FICO score, and it's the one thing that you can't rush. So, what happens when you don't have a credit score? If you are young or have never had any debt, you may pull your report and discover you have none. That term is often referred to as a thin file. It just means you don't have enough history for them to give an informed opinion of your risk. Don't freak out and go apply for 15 credit cards. The best thing you can do to build your credit is to have one or small debts, use them consistently, and pay them on time. And remember, if you have no intention of ever borrowing money, you may not need a credit score. It's not required. There is another time when you may have a zero credit score, and that is if you have paid off all of your debt and don't maintain any revolving debt like a credit card. Eventually, everything will fall off your report. It will take a little while, but it does happen. And if you choose to do this, you can find companies that will give you a mortgage. It's just a little bit more work. So how do they determine your credit score? There are 5 factors that they use to determine it. First, payment history. 35% of your score, and this is the largest factor. Make your payments on time. Remember, a day or two late will not hurt you, but 30 days late will. This seems easy, but life happens. While the best case scenario is that you pay off your credit cards every month, it isn't always possible. So be sure to make your minimum payment. If it ever reaches the point where you cannot pay, pick up the phone, call the lender, and see what they will be willing to do. If you have an excellent payment history, they may be willing to extend you a grace period once. I personally gave people extensions both when I was on my HOA and in my banking job. I wouldn't try this more than once, though. Number 2, the amounts owed. This is the amount of available credit that you spend. When a company issues you a credit card, their dream is that you will spend more than you can afford and just make minimum payments. That way, you pay exorbitant interest and help their bottom line. The credit bureaus don't want you to do this, however. They would like you to use about 30% of the available balance on your card. So if it has a $1,000 limit, try not to go over, say, $300 regularly. Number 3, the length of your credit history. Use your credit and don't die. That's all you need for this. The longer you stay alive and pay your bills on time, the better this section is. Number 4, your credit mix. This portion of your credit report is absolutely ridiculous. Please don't pay much attention to it. The idea they give you is that to have a good score, you have to have loan diversity, but it's really not true. I had only had a mortgage for over a decade and I had an excellent credit score. Maybe it would have been 1 or 2 points higher if I'd had a credit card, but then I might lose points in the amounts owed category. So if you're trying to get a car loan and the lender you approach says they won't give you a loan because your only debt is a mortgage with clean payment history, run away. Someone else will lend you the money. Although, please do everything you can to pay cash for your car. And number 5, new credit. This tracks your applications for new credit. They do this because it's a bad sign when someone applies for multiple credit cards at once. It's only 10% of your score, so don't stress too much about having someone pull your credit if it means you could get a lower interest rate or consolidate your debt into a better financial situation. So what can you do to help with your credit score? I am sure you want to raise your score if it's low. Having a higher credit score really doesn't have any disadvantages. Even if you don't plan on having any real debt, it's still nice to know that if an emergency comes and you need a loan, you can go to a reputable financial institution and not get ripped off. So the formula for this is pretty simple. Make 1 or 2 small purchases each month with a card. Maybe get a gas station credit card and use it only to fill the tank. Don't go over 30% of the available credit line. 2, pay the bill on time and in full. And then 3, do that over and over and over again. If you don't want revolving debt, you can do this with student loans or car loans or some other type of loans. Just make your payments on time every month consistently. Follow these simple rules and you'll be beating off lenders with a stick when it comes time to make responsible purchases. Another option I want to mention is a secured credit card. A secured credit card is a type of credit card that requires you to put a cash deposit down as collateral. That deposit usually becomes your credit limit or it's set right around that amount. So how it works is You apply and provide a refundable security deposit. Let's just say $300, though most places will not take it that low. Your credit limit is then typically right around that deposit, so it might be $300. You use the card like a normal credit card. You make monthly payments, paying it off. And then the card issuer reports that activity to the credit bureau. It helps you build or rebuild your credit. Secured cards are commonly used by people who either have no credit history, have lower damaged credit, or want to rebuild their credit score. They also can be used if you've never had debt before and you just want to try it a little bit and still have your savings. They can be used for that as well. So here are our 2 money quotes for the day. Mr. Oscar Wilde: "A man who pays his bills on time is soon forgotten." And trust me, there are many places out there that we want to forget that we are around because we're so boring and we pay all of our bills on time. And then a very quotable man, Mr. Abraham Lincoln: "You cannot escape the responsibility of tomorrow by evading it today." If you heard something today that sounded smart, you can head to A Frugal Chick, click on the Sense and Sensibility link to find all that information. And while you're there, sign up for our daily newsletter. It arrives in your inbox at 10 a.m. with the best deals of the morning. And check out A Frugal Chick on Instagram and Facebook. This is Laura Oliver from afrugalchick.com. Keep living well without going broke.